Hello and welcome to the Power of Zero show. I am the best-selling author of The Power of Zero, Look Before You Lerp, The Volatility Shield, and most recently, Tax-Free Income for Life. Grateful that you're with us. If you are looking for someone to help you navigate the pitfalls that stand between you and the 0% tax bracket, I suggest you head over to davidmcknight.com. And if you are an advisor and would like to transition your practice to a Power of Zero style practice, you can head over to powerofzero.com. All right, today we are going to talk about the part of Joe Biden's tax proposal that I think most affects people that are working within the Power of Zero paradigm. And that has to do with his proposed tax cuts on those that make more than $400,000. Now, embedded in his proposal is also this inference that for those whose tax rates are going to be raised, particularly those who are currently in the 35 and 37% tax bracket, those would go up to 37 and 39.6% respectively. What it presupposes is that those who are making less than $400,000 would see their tax cuts remain exactly the same. Let's dig into this because this has massive implications for those who are looking to get to the 0% tax bracket. So let's do a brief summary. We know that based on the current tax cuts that were enacted through President Trump at the end of 2017, the Tax Cuts and Job Act, those taxes are going to remain at their current levels for another 5 years. And they were going to revert to what they were in 2017 starting January 1st, 2026. Now, as I've said in Chapter 6 of the updated and revised version of The Power of Zero, this tax sale of a lifetime gives us an historic opportunity to take advantage of low tax rates when we are executing a shift between the tax deferred and the tax free bucket. It could be a Roth conversion. It could be an LIRP conversion. It could be just a decision to pay taxes on income and put it into a Roth IRA or a Roth 401k. Under the current Trump tax cuts, if you wait until 2026 to shift money, that 22% tax bracket becomes a 25 and the 24 becomes a 28. Now, all of a sudden, it's going to cost you that much more money to be able to execute these strategies, these shifts to tax-free. Now, something happened on January 5th that really changes everything. We know that the Democrats, had they won the runoff on January 5th, both races, they would then have 50 seats in Congress and Kamala Harris would be the tiebreaker vote. Well, they did, in fact, win both races. Now they have a simple majority in the House and in the Senate. And what that does is it creates a little opening, a little window, if you will, for Joe Biden to be able to bring to pass some of these tax initiatives that he campaigned on. What has Joe Biden said? He said that he wants to raise taxes on anybody making more than $400,000. If you are currently in the 35 and 37, you're going to then be in the 37 and the 39.6. Not only that, but you will pay FICA tax on any dollars that you make above and beyond $400,000. That's going to be like a 14% additional tax on top of that 39.6. And we've talked about some of the other taxes you could be paying in other podcasts. Here's the problem if you're Joe Biden. He cannot make these tax cuts permanent. He is going to have to work through the same legislative loophole that Donald Trump worked through to get his tax cuts through at the end of 2017. And that's through a process called budget reconciliation. If you want to make tax cuts permanent, you need to get 60 votes in the Senate. Okay, 60 votes in the Senate. Currently, Joe Biden has 50 votes plus the tiebreaker from Kamala Harris. So he can't affect a permanent tax cut, but what can he do? He can work through budget reconciliation to essentially extend the current tax cuts. So what does that mean? That means that he would instantly, when I say instantly, he would probably not get this through until the end of 2021. Why? Because nobody wants to raise taxes when we're in a recession. And for all intents and purposes, COVID has thrust us into a recession, even though the stock market's doing great. Not a true indication of how an economy is doing, by the way. So he probably won't push this through until the end of 2021, which means, like the Trump tax cuts, it's probably not likely to take effect until 2022. But here's the important part. He would be able to create a temporary tax cut similar to Donald Trump that lasts for 8 years. So in other words, whereas the tax cuts are currently slated to expire January 1st, 2026, he could effectively add another 3 years on top of that. So 8 years from the year in which he first institutes the tax cuts. What does that mean? That means that those tax cuts, at least for those making less than $400,000, and that's really mainstream America, Main Street America, those in the 22 and 24% tax brackets, that's who it's going to be affecting predominantly. That means your tax cuts would stay low for 2022, 23, 24, 25, 26, 27, 28, and 29. They would revert back to what they were in 2017, starting in 2030. Okay. What does that mean? That means that you would no longer, if you are in those middle tax brackets, particularly, and I'm particularly talking to those who are currently in the 22 and 24% tax brackets. For those of you who are currently in the 22 and 24% tax brackets, you now have 8 years over which to execute a shift from tax deferred to tax free. And that's how it works under budget reconciliation. You can't get through a permanent tax cut if you don't have the votes. So you have a simple majority, 51 votes, you can do budget reconciliation. It's what George Bush did with his 2003 tax cut. It's what Donald Trump did with his 2017 tax cut. It's what Joe Biden is likely to do with his 2021 tax cut. So let me just share with you why this is such a big deal. Okay. Doesn't seem like a big deal. I can assure you it is. So what I did was I went over to my magic number calculator. Okay. My magic number calculator basically said, hey, what if we had someone who has $35,000 of Social Security, maybe a pension of $30,000, 1.5 million in, in an IRA, and wants to get this money shifted by January 1st, 2026. The ideal balance, by the way, for him, according to the calculator, is zero. So he doesn't want to have any money in there by the time tax rates go up for good in 2026, were that to be how things shake out. Let me give you an idea of what would happen here. Okay, so according to my math, you would have to shift if you were, let's say you had $80,000 of taxable income today, and you needed to get all 1.5 million shifted over a 5-year period before tax rates go up for good. What you would find is that you would have to shift $346,462.20 per year, every year for the next 5 years. What would that do to you? That would put you in a marginal tax bracket of 35%. It would push you, and that's assuming tax rates don't go up and they stay right where they are. Assume Biden doesn't get what he wants somehow, some way. So that would keep you in today's tax rate of 35%. If, however, he gets his tax cuts through budget reconciliation, watch what happens. If he can stretch that out, or if he can stretch that shift out over 8 years instead of 5 years, now all of a sudden you are only shifting $232,082.72 per year. Even if you add that on top of $80,000 of taxable income that you're already experiencing for your lifestyle, what have you, remember the conversion would go right on top of that. That would still keep you only in the 24% tax bracket. Even if tax rates went up, you would still be in the 24% tax bracket. Under the old scenario, if you had to shift $346,462.20 over 5 years, that keeps you in the 35% tax bracket. So that's an 11% difference in taxes that you would have to pay if you were forced to shift it over 5 years as opposed to 8 years. So this is a really big deal if Joe Biden gets what he wants. It's not going to be a great deal if you make more than $400,000. It's not going to be a great deal if you are planning on shifting, enough money from tax-deferred to tax-free that it pushes you above and beyond that $400,000 threshold. But if you are in those 22 and 24% tax brackets, this is a good deal of historic proportions. Let me read to you what I said in The Power of Zero in the very last paragraph of the updated and revised version. Here's what I said, and I'll tell you how this changes. Tax rates are slated to return to their pre-2018 levels in 2026, but the reality is this: they're likely to go even higher as we approach 2030 and beyond. All this tax legislation did was kick the can 8 years further down the road. So don't let lower taxes in the short term distract you from the broader financial crisis. Taxes will go back up in 8 years, but the freight train looming beyond the 2026 deadline just picked up a little more speed. You now have even more urgency to establish a solid math-based asset shifting program today, because when taxes are on sale, every year counts. And as of January 1st, 2018, you're on the clock. So really, the only thing I would really change here is just change the dates, okay? You would now have a January 1st, 2030 deadline. Everything else that we said here holds true. By keeping these tax rates low for middle America, we just kick the can further down the road, meaning the day of reckoning is a little bit further down the road. But when 2030 hits, the cost of fixing all of this sort of exuberant spending is going to have to be even more severe, even more draconian. So the broader picture is this. By not broadening the tax base to cover middle America, Joe Biden is simply kicking the can further down the road. He is not fixing, he's hacking at the leaves of the problem, but he's not hacking at the roots of the problem. I often like to refer back to Maya McGinnis's article. She's the president of the Committee for a Responsible Federal Budget. I've quoted this article in the past. Remember, if we wanted to balance the federal budget by 2025, we would have to raise taxes on all those making $400,000. In other words, all income that they made above and beyond $400,000 up to 102%. That's obviously impossible. Nobody would keep working if they had to give away 100% of what they made. So she says, well, that's obviously realistic. What if we said included any dollars above and beyond $250,000? That would have to go up to 90%. They'd lose 90% of any dollars they made above and beyond $250,000. If they lowered it to $150,000, they'd have to raise the top marginal tax bracket to 80%. And then if they simply said, what would we have to do? What would we have to raise taxes on everybody? What would be that tax rate that we have to raise on everybody in order to balance the budget by 2025? It goes up to 49%. In other words, to fix our long-term problems, we have to, that contemplates raising taxes on the middle class. Now, recently this week, it's brought to my attention that Gina Raimondo, who's now the Commerce, or at least nominated as a Commerce Secretary, to fund Joe Biden's climate plan, she insinuated that tax rates would have to go up on the middle class. So whatever way you slice it, they're going to need more revenue. And as this article shows, simply taxing the top 1% or those that make $400,000 or more is not enough. You cannot tax them enough in order to get the revenue you need to right our financial ship. That tax base has to be broadened. Everyone will have to pony up eventually. So the long and the short of it is, when I look into my crystal ball and I see how this year is going to shake out from a tax reform perspective, I see Joe Biden working through budget reconciliation to extend the tax cuts on the middle class. Now, obviously, I've made the case that the math behind that doesn't make sense for our country, but that's what he's going to do. It'll probably happen at the end of 2021. And what that means is that you now have 8 years, okay, because he's not going to get it done by 2021. The first year will be in 2022. So he'll have 8 years, which means you have 2022 through 2029 to get your shifting done. Now, lots can happen between now and then, but that is how I see this going down. And if it does go down that way, this is a great boon for those of you who are looking to get to the 0% tax bracket. It allows you to stretch that tax obligation out over a much longer period of time, keeping you in a lower tax bracket. Like in the example I gave you, you can stay in the 24% tax bracket as opposed to jumping up into the 35% tax bracket. So keep your ear to the ground, folks. I will continue to update this as Joe Biden starts to address these things. Remember, his biggest fish to fry right now is the COVID stimulus. That's what he wants to push through because that's what he campaigned on. He wants to push that through. He wants to get people vaccinated. But once those things happen, he's going to start tackling tax reform. And most experts believe that by the last quarter of 2021, and you can only do budget reconciliation once per year, by the way. So they've got one shot at this, okay, if they're going to do it in 2021. And that usually happens around October. So I would look towards October for some sort of action on the part of the Biden administration in terms of extending those tax cuts. They can't make them permanent because they don't have the votes, but extending them so that they'll last 3 years longer than the current Trump tax cuts. All right, folks, thank you for being with us today. Once again, if you're looking for help navigating all of this, you can head over to davidmcknight.com. We're happy to refer you to a top Power of Zero advisor, a member of our elite Power of Zero advisor group. If you are a financial advisor looking to adopt these principles in your practice, you can head over to powerofzero.com. And by the way, if you want to see all the charts that we discussed today, you can go over to YouTube and look at my YouTube channel, and you can find the video of this podcast in which I include lots of stimulating and helpful visual aids to help you understand all of this stuff a little bit better. One last thing, if you want to get my books in bulk, you can get all of my books in bulk. You can mix and match and get bulk rates. Head over to davidmcknightbooks.com. davidmcknightbooks.com. Thanks, everybody. We will look forward to chatting with you same time next week.